Hello everyone, my name is Oge and I'm teaching people how to trade, people that do not have funds to get a mentor. I'd like to give out a shout out to my coach SK. He did a wonderful job on me and he made this chart look amazingly simple and more easy. But you can learn the skill, but you need to work on your psychology on a personal level. So here we have a break of structure, but firstly I'm going to draw it out for you. So it's a higher high, higher low, higher high, higher low, higher high, higher low. Don't forget I told you it must not break here, and it will be a break of structure here and its continuation. In the sense that, sorry for my drawing here, in the sense that there is a break of structure here, there is a break of structure here. Do not forget to label your chart. You can make this easy. I've shown you to one of my short videos on how to label your chart, and this is a break of structure here. And also, do not forget that for a mitigation block, there shouldn't be a break of structure. But I think in a retail level, you can call it M or you can call it double top. Yeah, in retail trading, they call it double top. But for us, we call it the mitigation zone. So the other block came in here, the market came in here, and there was an impulse move. But the impulse move did not do a break of structure up here. There was no break of structure up here for the impulse for the trend to continue. There wasn't a break of structure. So what we do is we take in that last bullish candle before the impulse move. We take that candle and and look for a fair value gap. Use our Fibonacci as always, and we look for the next reference, the next institutional order flow in that zone. Look for a zone here, one of the institutional order flow zones around that area. Then what we do is we take our long or short position and we put in our stop loss, and we can place it on top of that mitigation zone. And you know now how it is here. The previous lows are liquidities, so you can target those areas as your own form of stop loss. You can target those areas as your own form of stop loss. So it depends on the level of how you want to do your own kind of stop loss. So liquidity here, the old lows are this form of liquidity. These are the old lows that will have to be taken and new ones will be created. So they are our form of take profits that we use for our own kind of take profits. Now I want to show you on the chart how the mitigation zone look like. Let me delete this one. So the mitigation zone, if you can see this one, we have a break of structure here. That's a BOS. There's a break of structure here. Now, if you notice here, there was meant to be a mitigation here before the zone went down. So nothing happened here, and it continued going on an uptrend, meaning there was a shift in the market structure here. You can see there was a shift in the market structure. I do want to label. And what I do is I will mark this candle as my own form of mitigation block. This might be I haven't done a top-down analysis on this chart. I'm just showing you an example, and this will be my own form of entry. But now, before I take an entry under this mitigation block, I will take my Fibonacci from the high to the low, from the low to the high, and I'll be looking for any mitigation, any zone I can find here, anything I can find here that shows me a fair value gap and an order block. So I'll take my fair value gap, I'll pick mine around here. I'll pick mine around here, but I won't take my entry from there because this one here has filled this fair value gap here. So I won't take that zone. So I'll look for a fair value gap inside here, and I can't even find one, but I can find another block here. But I know that this is the candle that I'm going for, but I can still refine it. So when market gets to my zone, I can decide I do not want to enter yet, and I can come down to 5 minutes and see what 5 minutes is showing me. 5 minutes is showing me here another mitigation block. So it has made my stop loss a bit lower, smaller. So I see a mitigation block here also. Okay, that's a breaker block I'm seeing there. Market has shift structure. This is on 5 minutes. I just refine the zone and I come here and I enter my trade from there, and you can see my stop loss has been reduced. But I'm always trying to be very careful with my trades. So I'll still put my stop loss a bit higher. I try to be very conscious of my zones. So I don't really do so much. I do 1 to 2, sometimes 1 to 1, depending on how much I've back tested. So I'll still put my stop loss here, But you can put yours here. It depends on you. You can put yours here and become 6 or 7 pips, and you can go for the old lows. This is how you refine your zone. So I use my 15 minutes for my higher time frame, and this was how I made my chart very easy. And do not forget now, the old lows and the old highs are the ones that become a form of liquidity for take profit. So you can see now, markets came here. You can see the shift in structure. It's mitigated this zone. Do you see it? And it's going on its way. So I can put here. I can put my take profit around here because I'm seeing old lows. But like I said, I haven't done a top-down analysis on this chart. I haven't done a top-down analysis on this market at all. So this is what I'm seeing here, and it's going on its own. Let's see if it's take out the old low. It has taken the first one out. Let's see. Oh, that was really messy. So that's it for us from here. Okay, I haven't done total analysis on this chart, but you can see it tapped on the first old low. That is, you can take your first take profit here. But if you can very observant, this is a 1 to 4. Can you see it? So you can pick a zone and you refine it to the way you want to refine it in your own best knowledge. But this is the main mitigation block, and I went down to a lower time frame to find another entry. But what I'm showing you today is just how a mitigation block is being created. That's all. So you can use it for your trade entries. You can use it when you want to run away from your trade. It has done this on a trade. You have to be very careful for a take profit, or um you have to be very, very careful when it does mitigation on the higher time frame. It means market has changed trend or so. So please do not forget to ask question in the comment section, or make a comment on the videos, or click the like buttons also, and also click the subscription buttons to get more updates or videos of classes or tutorials I'll upload on my YouTube channel. And thank you. Thank you.